Hello my good traders, we are here again with a short video. Now, I hear a lot of people complaining about the profit they make or the loss they make. And you will always hear people saying they have been cheated or their broker is not being fair with them in terms of the profit they've made or the loss they've made. And so I decided to do this video to explain something that maybe I'm sure those people are not seeing or they haven't come to realize, which of course could be the reason they are saying what they are saying. So let me explain this very thing about bid price and ask price. I'm sure you have heard of it, you have read about it, but there is something maybe you haven't actually taken time to notice, and it will be best explained whilst the market is still closed. So this video is going to be about bid price and ask price, which will reflect or go to explain why your losses might be increasing or your profit might be very little. Okay, now let's go straight into the video. Now, if I scroll, you will see some two lines. If I put it here, you may see the lines very well. One of the lines is kind of green, which is below. The other one is red, which is above. These two lines are called the bid price and ask price. I have already done a video about the bid price and ask price. But for you to easily understand in simple terms, what this simply means is that the broker is giving you two different prices. One will be for your buy trade, the other one will be for your sell trade. Now, the line below is actually the price at which the market will sell. And then the line at the top, which is the red line, is actually the point at which the market will buy. If I want to break it more down or make it more easier, what it simply means is that anytime you are going to enter a buy, you will always buy on the red line. That will be your entry price. The red line becomes your entry price. And whenever you are going to place a sell, the green line at the down here becomes your entry price. So whilst the market is still closed, you can see these lines are very stable. They are not moving. But when the market opens, these lines will keep moving. There are a few of us who do not have these two lines on their chart. Most often, either the red line will be missing and it will be left with only the green line, or the two lines will be there, but the difference is very close, and so you often don't see it. And because of that, maybe you don't put it into thinking. But this video will explain further. So to make it easier, what it simply means is that anytime, it's not only on this pair. When you check any other pair, for instance, if I go back to check on any other pair, if I come here to the pairs, any other pair I'll pick, for instance, GBP JPY, you see that the two lines are more wider on GBP JPY than maybe GBP CAD. If you look at it and you look at it well, if I zoom out well for you to see, you see that these lines, the red one is up, the green line is down. If I go for maybe GBP JPY, you see that it's more wider. Good, I'll explain. Each pair and how wide these two lines will be. This is Euro AUD. You see how close the two lines are below here. If I go for GBP NZD, it's loading. Yes, you can see the two lines. Let me see Euro USD. You can see the two lines. Good. So every currency pair and how wide these two lines will be or how close they will be. Now, if I go back to the GBP card trade that I was using, if you look at the difference between the up line, which is the red line, and then the green line, by taking the price into consideration. The red line is at a price of, if you watch here, you see the price. The red line is at a price of 1.67856. And the down line, which is the green line, is at a price of 1.67802. So if you want to look at the difference between these two lines, it is 5 pips. The difference is 5 pips difference. Now, this 5 pips difference that you are seeing between these two lines is what we call spread. That is what we call spread. The difference between the asking price or the ask price and the bid price is what we call spread. So this difference of 5 pips is what your broker is taking from you as a charge. That is the charge your broker is taking from you for allowing you to place a trade on GBP card. That is their commission. So your broker makes commission from the trades that you place. Mind you, the brokers are supposed to be mediators. They're supposed to mediate between us and the liquidity providers, which is the big banks. And so they make profit for being mediators. So they take a commission for allowing you to place a trade or to do transaction, if I'll put it. For allowing you to be able to do a transaction between yourself and the liquidity providers, they take this charge, which is about 5 pips here. And you already know, if you have watched my video on calculation of pips, and then if you have also watched my video on lot sizes, you would understand what 5 pips will be depending on what lot size you are using. If you are using 0.01, and then it means 5 pips is going to be about 50 cents, which is half of $1. So it means half of $1 of your profit is going to the broker. If you make 10 pips, it means half of it is going to your broker. So it means if you place a trade and already 5 pips is going to your broker, it means already your trade is at a deficit of 5 pips. So before you can be in profit, unless the trade goes beyond 5 pips. Does this make sense? You're already at a deficit of 5 pips. And so before you can make profit, unless your trade goes beyond 5 pips, because 5 pips is already going to the broker. So when you make 1 pip profit, it means it is to the broker. If you make 2 pips profit, still to the broker. 3 pips profit, to the broker. 4 pips is going to the broker. 5 pips is still going to the broker until you make 6 pips. So when you make 6 pips profit, and you deduct the 5 pips for the broker, you are left with 1 pip. So it means you could see that your trade has made profit of 6 pips, but you are only shown a profit for 1 pip because 5 pips is going to the broker. So you have only made 1 pip profit, although you have made 6 pips profit, but it's only 1 pip profit that is coming to you. The rest is going to the broker. So if you make 7 pips profit, it means that you have only made 2 pips profit for yourself, and the 5 is going to the broker. Do you get this? That is why I always tell you that whenever you are in a trade, don't look at often the amount here. You see that the floating amount will be here. You'll be seeing it somewhere here. Don't always look at whatever you are making over here as floating, but you should always look at the amount that is quoted for you at the top here. Because that amount is after they take out the broker fee, which is the spread. What is actually yours is what they display at the top here. So what you see at the top here is what is yours, and not what you see below here. What you see below here is not for you, because part of it is going to the broker. It is only what you'll be seeing up here that will be yours. So I always advise that when you are having a floating trade, always look at the top. Consider the top here and see what profit is there. I don't know if this is making sense. So that is one way your broker could be cheating you if you say they are cheating you. But in real terms, they are not cheating you. They are charging you for their fee. And the sad part of it is that they charge you this fee even when you have not made the profit. So if you make 5 pips loss, okay, let me explain the opposite. If you make 5 pips loss, it means that in real terms you have made 10 pips loss. You know why? Because already you are at a deficit of 5 pips. It means already immediately you enter a buy or you enter a sell on GBP card with this spread. Immediately you enter a buy or sell, it means you owe 5 pips. You owe 5 pips. So if the trade runs into a loss of 5 pips, it means you are actually in a loss of what? 10 pips. If the trade runs in a loss of maybe 10 pips, you are not at a loss of 10 pips, but you are at a loss of what? 15 pips. Does this make sense? So you will see that you were at a loss of maybe $20. But when you close the trade, you realize that your total loss was maybe $22. And you are like, how? What happened? Because I saw that I was at a loss of 20 pips before I closed the trade. Sorry, $20. And I closed the trade. How come it is $22? You have forgotten that your broker had already charged you what they call spread, which is a deficit to you. So you need to be very watchful when you are about to enter a trade. You always need to find out, is the spread closed or widened? These two lines, the red and the green line, are they wide or they are closed? If they are wide, how many pips difference? Just as I have checked this one and it is 5 pips difference. You need to be sure of the spread and find out, what is my deficit on this pair that I want to take? If the deficit is too much, if it's about 10 pips, then I will advise that you wait, you don't take that trade. Because if the deficit is about 10 pips already, it means 10 pips is already taken. You are already in the deficit of 10 pips. So if you make 20 pips profit, 10 pips is your profit. 10 pips is going to the broker. If you make 50 pips profit, you are actually having 40 pips profit. The remaining 10 pips is going to the broker. So you always, as a trader or as a beginner, you make sure you check the difference between these two lines, which is the ask and then the bid price. Take note, like I said, if you are selling, you sell at this green line. And if you are buying, you buy at this red line. So it means before you will be in profit, for instance, if you are in a sell, before you be in profit, it means you have bought at this green line. Before you be in profit, it means that this red line you are seeing here must come and cross this level of the green line before you be in profit. The same way, if you are buying, if you take a buy on this trade, what it means is that when you take a buy, it means you took the buy on the red line, on this red line here. So it means before you will be in profit, unless this green line at the bottom here comes up to cross the entry price here, which is the red line level here, before you will be in profit. Which is literally to say that if you be in profit, you need to start being in profit from 6 pips up. If you are with below 5 pips, it means you are still in loss, because 5 pips is going to the broker. So if you have made just 5 pips profit, that profit is still for the broker. It means you haven't made any profit for yourself until you get to 6 pips before you would be boasting of 1 pip for yourself. So this thing must be well understood. If not, you will always have issues with my broker is cheating me. My broker is cheating me, or there is something you don't get it. But that is also not the case. Your broker is also there to make commission from your trades. Whether you lose or you gain, that is the sad part. If you lose the trade, they have taken their profit. If you win the trade, they have taken their profit. So their profit is always taken. Immediately you place a buy, especially instant execution. one will say that what if the trade is not instant? If you even place a pending trade, there is still the spread fee there. Whenever the price triggers your entry price, it triggers with the spread. So it doesn't matter whether it is a pending order or an instant order. Any which way, you owe spread and you will pay. Now, apart from that commission that is taken, there are other commissions that are also taken. That one is called swap. Swap is when you allow your trade to run over the next day, for the next day. And sometimes your swap can be positive with returns or can be negative with an additional deficit. And let me explain that. If it happens that the pair that you are trading, I think there is a way you can check. Maybe in another time I'll do that video. There is a way you can check to know which pairs will give you deficit of swap and which one will appreciate in swap. I don't know if you understand the term. For instance, if GBP card, there is a place to check to know whether GBP card, if you are in a buy trade, whether your swap fee will be extra profit or it will be a deficit. So there are some currency pairs that, for instance, if you enter a buy and the trade close for the next day to open, you will be given extra money for swap. You'll be given bonus. So for instance, you may be given 0.20 as swap fee, which is positive. It means you've gotten additional 20 cents on your trade. Although your trade is still running, it hasn't closed yet, but you have been given 20 cents on the trade. And then they could say that on the same pair, if you are selling on that pair, you could be getting minus 20 cents on the pair as swap. So what it means is that if that pair you are in a sell trade, then when the day closes for a new one to open on that trade, you will have a deficit of 20 cents added to your losses. So if you are in a loss of $1, it will become $1.20 loss. I don't know if you get it, but this is the explanation. If you are in a loss of maybe $1, you will see $1.20 because the trade has run from the first day to the next day. And it is possible that sometimes when you are in a sell, you'll be getting additional profit for swap. And when you are in a buy, you'll be making deficits. You'll be getting negative or you'll be making losses, additional losses. So it's vice versa. So there is a way to check to know which pair will give you deficits in what they call swap, and which one will give you maybe positive impact or additional money for swap. When you are able to check those pairs, all pairs has its way. There are some pairs, whether you are in a buy or sell, you'll be in deficit. You'll be owing. You owe when the day ends for a new one to open. You will surely owe. So some, whether you are buying or selling, you will owe. But there are others that some, when you are buying, you make additional money. When you are selling, that you owe. Or some too, when you are selling, you make additional money. When you are buying, you owe. So it's always vice versa. It has, the dynamics are there. So swap is also another fee that is often charged. But I want you to know that swap is not as negative as spread. As for spread, it is a charge that is negative already coming. But swap could either be positive or negative. I think you understand. So sometimes you will see that your profit is like this, but when you close the trade, you see that there are some charges. You need to understand that those charges are real. They are there. And it is not necessarily because your broker wants to cheat you or want to kind of take your money. No. I'm sure you are getting me. So the question is, if you do not have both lines on your chart like I do, how can you get the second line, which is the second price, to show? Because you need the two lines to be able to determine the swap. the spread. You need the two lines to be able to determine the spread. So what you need to do is to come to this side of the menu, or to go straight forward, just go to the general menu at the top left corner. When you click on that, when you click on it like this, then you go to a menu here called settings. You see settings over here. You click on settings. So when you click on settings, then you see these menus over here. When you scroll down, you see show ask line. That is the other price that you often do not see. This one, ask price line. Some of you, yours is unticked. If yours is unticked and it's not ticked like this, you need to tick it. And once you tick it and you go back to the chart, you will see that the two lines are now showing on your chart. So you need to always show the ask line. For instance, mine is ticked. So if I untick it right now, let me untick it. If I take it off and I come back to the chart, coming back to the chart, all I need to do is come down to the chart below here, click here. Then it's taking me back to the chart. So if I go back to the chart, you see that the other red line is no more there. You see that it's only left with one line. As you can all see, it's only left with the green line. So that is the only line left. So if I go to all the pairs, I will only be seeing that line alone. For instance, if I go to Euro USD, I will be seeing just one line, green line. I will not see the other line. So I may be thinking that that line is both the asking price and then the bidding price. So it means at this point, the asking price is hidden. The buying price at the point that you will buy is not showing. They are showing the price at which you will sell. So assuming the price at which you will buy is lying somewhere here, and you buy. Can you imagine? I don't know if you get it. Because it is only the price at which you will sell that you are seeing. The price at which you will buy is not showing. So I'm saying that let's assume that the price that you are not seeing is currently lying somewhere here. It's lying somewhere here. That is the second line. And you are not seeing it. And then you see Euro USD and you take a buy. It means that before you will make profits, unless this green line comes above this red line over here, before you will be in profit. And can you imagine how many pips? That is almost about 20 something pips. Almost about 20 pips or whatsoever. From 48 to 59. How many pips difference? 15 to 16 pips difference. So that is at the blind side of you. Meanwhile, you thought that, you took the trade at this price. And the trade is currently at this price, somewhere here. And they are still telling you are having negative. Your account balance is still negative. And you don't get it. Why? Because you took the trade at this line here, green line here. Meanwhile, your trade is up at the red line here, but you are still not in profit. Meanwhile, you have forgotten that the other line is somewhere here. And the trade hasn't crossed above that line for you to be in profit. So the question is, who caused it? Is it you or the broker? The broker didn't cause it. You're supposed to know that it's supposed to be two lines on the chart. So if the second line is not there, you would have to come and go to settings and make sure you bring the second line, which is the ask price line. You take it. And once you do that on the chart, you will see the two lines as you can now see them on the chart. Please, I want you to get everything accurate when it comes to Forex trading. That is why I am taking my time to explain this to you. Most traders may not have the time to explain on their channel for you the way I am doing. But I am deliberately taking my time to do it because I want you to get this Forex thing once and for all. I want you to also be genius. I want you to understand all the ins and the outs of Forex. That is my goal on this channel. So if you haven't subscribed to this channel yet, then please do, because a lot is there. A lot of things are there I will share and you need it. So this is what you need to know. Now there's one more thing before I end this video. And those of you who watch the video to the end will get this as a tip. Whenever the market opens, today for instance in Ghana, I am in Ghana, the market will be opening at 9 p.m. my time, which is 5 p.m. Eastern time. Okay, 5 p.m. Eastern time. But in Ghana that will be 10 p.m. or 9 p.m. if I put it 9 p.m. Ghana time, because I am GMT. London will be the same, 9 p.m. London time. London time and Ghana time is the same. So whenever the market opens at 9 p.m., today is Sunday, so the market will be opening soon. I am not at home, that is why I couldn't give you the signals for the week. So hopefully I'll be home by tomorrow, and if I see any signal, I may do a video for you to also have it. And so when the market opens, it's not only when the market is about to open. Every day the market opens at 9 p.m. my time, so you would have to check what time it is in your country. Especially now that the market is about to open, you have to check what time the market will be opening, and then that time becomes the time the market closes for a new one to open. Every day between Monday to Friday, it always closes for a new one to open. So whenever the market closes, when a new one is about to open, the brokers will always widen the asking price and the bidding price. They will widen it. They could widen it 20 pips, 50 pips, 30 pips. Some brokers can even widen their pips up to 50 pips, 100 pips. I remember a friend showed me a broker at 9 p.m. when the market had closed. The broker opened a spread of 75 pips. Spread alone, 75 pips. And the pair I remember very well was GBP NZD. They opened a spread of 75 pips. So assuming this trader had taken that trade at 9 p.m., what it means is that he is at a deficit of 75 pips. So even if he makes 50 pips and closes, he is still lost 25 pips. So whenever it's 9 p.m. my time, or I should put it this way, whenever the time ends or the day ends for a new day to open, a new Forex day to open, the brokers will always open their spread. Even if the spread is as close as 3 pips or 2 pips or whatsoever, they will still open it to sometimes 5 pips, 10 pips. And then it takes a maximum of 2 hours before the brokers will begin to close their spread. After 2 hours, when the market open, every broker should close their spread to the minimum. If they don't, then that broker is a wicked broker. I repeat, if the broker doesn't close its spread after 2 hours when the new day has begun, then that broker is a wicked broker. Ideally, I will advise that you don't even join that broker. You should look for a better broker, because every good broker, for instance, my broker that is very good, after 1 hour they close their spread. After 1 hour. Some brokers can leave theirs up to 1 hour 30 minutes. Some can go up to a maximum of 2 hours. But after 2 hours, under no circumstance should a broker still allow such a wide spread. After 2 hours, they should all close their spread. But if your broker is still giving you a wider spread after 2 hours of the day, then I would advise ideally that maybe you go to the description of this video, you'll find my broker link. You see broker 1, broker 2. Sign up with any of them, and I can be sure to tell you that after 1 hour, when the market opens, after 1 hour, the broker will close its spread for you, and you'll be left with something little. If you look at this Euro USD, the difference is just 1 pip in terms of spread. Okay, if you look at it, this is Euro USD. The difference is just 1 pip between the red line and the green line. It's 1 pip because 1.0749, 1.0748, so 49.48 is just 1 pip difference. 1 pip. So my broker, if you are taking Euro USD, the broker is just charging you 1 pip. So if you go into profit of 2 pips, it means you have 1 pip profit. It's better. It's good. Any broker that will charge you a spread of up to 5 pips is better. But any broker that will go beyond 5 pips, charging you 10 pips, 20 pips, 50 pips, come on. That is a wicked broker, and I will never recommend you to be part of such a broker. That is why most of them, when you open their MetaTrader, you often don't see one of the lines. The line is hidden. You have to go and bring it. Sometimes they may say it is not their fault. You're supposed to know and bring it on the chart. So that is why I'm doing this video. So you're supposed to know and bring that second line, which is the ask line, on the chart, so that you will be able to know the difference between the two lines, how many pips it is, and be able to decide whether to enter that trade or not. Because whether you do it or not, it is still going to either be in your favor or against you. So you would have to think and take a decision. The last point, which is also a tip for you to know, is that whenever a major news is coming, most brokers will open their spread when it is left with 5 minutes to time of the news. For instance, this week there's going to be 3 major news that is coming. There are about 4, but 3 are much of concern to me. The USD interest rate, Fed interest rate is coming. JPY interest rate is coming. Euro interest rate is also coming in this week. So these 3 interest rate decisions, whenever it's left with 5 minutes to time, most brokers will open their spread because they know that volatility is coming. Heavy volatility is coming. So I don't know whether they do that to prevent you from trading during those volatile periods. I cannot tell, or they also want to capitalize on making more profit during the volatile time. I'm sure that may be the reason, because I don't really know why they do that. But I'm sure they also want to make extra profit during the volatile time, because they know that once the news drops, there's going to be volatility in the market. So they also want to make extra money from you. So they open spread when the news is about to be dropped. 5 minutes to the news, you begin to see the spreads opening. So you also have to be careful and watch to be sure what spread you will get after a major news before you decide to take a decision to buy or to sell. I'm sure these tips will help all of us as traders, and for us to really know the truth about forex trading, and for us to know that sometimes it is not that the brokers that cheated us, but it's something we didn't know or we didn't see. That is why maybe the complaints are there. But if your case is not any of this, then you have the genuine complaint to make to the regulators of your broker. Okay, all you have to do is to gather your evidence, and then you can report your case to the regulator of your broker. And maybe in another video I'll try to explain how you can file a report if you feel your broker is cheating you and you want to file a report to the regulators. I may do that as we go along on this channel. So subscribe to this channel, hit the notification bell, so that when we post any new video, you will be the first to grab it. So today, this is what happens when it comes to spread and some of the charges that the brokers charge, which we often don't see, or it's like we don't take critical notice. I'm sure today this explanation will clear some doubts. Thank you. My name remains Kofi, and thank you for watching. I'll see you in another video soon.